Nice. Okay, I close this.
Yes, it's working right.
Hi, everyone. Welcome to Market Talk. 2 weeks have passed. Sorry for this delay. We had some technical difficulties. Volatility is still present in the markets, but indices are grinding higher. Of course, the topic for today, at least from my part, will be a lot and a lot about silver, about the next levels and what that asset
On call,
is
man.
doing.
I'm on
And
call, dear.
yeah, also we have bonds. Bonds are struggling. We spent most of these 2 weeks below our macro zone, and even after the Fed rate decisions, we see a lot of weakness in that space. I'm sure we have a lot to talk about. Before we start, I want to remind everyone that myfractionrange.com is a risk management platform. We offer a free trial, so if you have not tried our services, feel free to try it out risk-free. And yeah, let's jump in. So Ted, good to have you back. It's been a while. We had Fed, we had a lot of interesting statements from the President of the United States, as always. So, what is happening in the markets, and what are your views?
Hey, good to see you guys. Thanks for having me back on. It has been 6 weeks and two Fed meetings, so we do have a fair amount to talk about. And trying to address the question at hand of whether or not we're going to have a Santa rally this year. So let me just go to my screen here and start the show. And are we going to have a Santa rally? I'm going to touch on just very briefly. We've had no data since the federal government's been shut down, very limited data. So I'm not even going to comment on macro regime other than to say what my service says. And then I'm going to try to address whether or not Santa's coming to town or not. And then we'll go through some positions and trades. So from a macro regime point of view, we are back to Goldilocks. We took a 1 week trip to deflation or growth down, inflation down. That flipped after we had that little end of November sell-off, got us back a quick return. So we're digesting those gains now and seeing where we're going to go from here. So how have assets performed in 2025? That's sort of the place I want to start because oftentimes momentum will carry us through from that point forward. So I've got a list here of macro assets, SPY, EFA, EEM in the stock category, TLT, GLD, PDBC for commodities, UUP, and FBTC is a proxy for Bitcoin. So what you'll see is that our top performer for the year, and this is as of close yesterday, was gold up almost 61% for the year, followed by EEM, emerging markets up 33%. Developed markets, EFA 29.75 and SPY up 18.34%. Down is the dollar and Fidelity, the Bitcoin fund, also down 1% on the year. So what's standing in the way of a Santa Claus rally extending us further? Well, since we last met, we had the FOMC meeting on October 29th. And at that time, we were told in no uncertain terms that a further reduction in the policy rate at the December meeting is not a foregone conclusion. In fact, far from it. And that did not sit well with assets. And we can see that since that time, this is since the far from it cut on 10/29, that the SPY has basically treaded water. EFA's up a little bit, EEM's down, TLT's down. Gold, however, continues to perform well, so up 7%, and commodities also up 2%. Bitcoin, however, with the 4-year cycle coming to their close at about the same time, has sold off 16%. Actually, I think it was down another couple of percent today. So what's happening since then? Well, yesterday, I want to touch on this. Yes. So what's been the issue with FOMC cuts? In previous cuts, what we've seen is this is the 10-year Treasury note. It's actually TNX, which is a proxy for the 10-year note. And this was coming into the September 16th cut. And we had 10-year bonds trading down at a low, and they proceeded to rally off of that cut. Again, we had a similar situation on October 29th. But this time, which was yesterday, we were actually starting to break above what I've considered a critical level here, around 4.2%. Into the print or into the FOMC meeting, we were actually starting to break out, and then what you see over the last 2 days, this sold off. So it's not the same behavior as we've had over the last two policy meetings. So I'm kind of noting that to file. What we did get was the committee decided to lower the rate to 3.5 to 3.75, and they judged that that's the balance of risks. And of course, they did that the reserve balances have declined to ample levels, and they'll initiate purchases of short-term Treasury securities as needed to maintain an ample supply of reserves, which are savings accounts for the banks on the Federal Reserve balance sheet. And basically, the market took this to mean QE. So it's not QE, but it was perceived as so, and we had a nice rally off of that yesterday. And the things that I took away, kind of the 5 key points that I took away from this meeting yesterday, were that we're in a neutral range. So the Fed regards us as not restrictive, not providing liquidity. The Fed chair also said that if we didn't have tariffs, inflation would be in the low 2s, which is close to their target. An interesting point was job creation is negative. There's actually an overstatement of about 60,000 a month. So if that's true, then the U.S. has been generating negative 20,000 a month, which he attributed largely to our de-immigration policies. And then this reserve management purchases, they're buying 40 billion in bills. They'll actually take that out to as long as 3-year notes, but primarily they're buying bills at 40 billion a month. So the end of the balance sheet quantitative tightening is done, and now we are starting to buy short-term bills, which again does not do anything for the long end of the curve. It just helps keep short-term bill rates where they need to be. And he says there's no risk-free path. There's inflation risks and there's employment risks, and they seem to be leaning towards more inflation, more employment risks at this point in time. My conclusion on that is that this was a positive for Santa Claus rally. I took it as such. I did add to some positions yesterday based on that. However, there are a couple of other things that we need to talk about. The second sort of hurdle is, and you probably heard this a lot last week, is that they told us that we were talking about a breakout in the CRB index. So basically a commodity breakout. And you can see here, this was last week, this is DBC, which is a proxy for commodities for CRB index. We started to break out, and this thing failed this week. So, and you can see that when you look at other commodities, go back one. When we look at other commodities, this is DBB, which is base metals fund. That has been ripping since midsummer. It's been a great position for me. It continues to do well, big volume this week. So that's clearly metals have been a source of strength for commodities. But then when you look at DBA, for example, which is agricultural, it's been kind of mired in a range for the better part of the year. Up and down, mean reversion trade, buy the lows, sell the highs. It's kind of the way to play that. We're really in no man's land here in the middle of this range right now. So no contribution from agricultural commodities. And certainly USO has been breaking down, which is the proxy for crude oil, has been breaking down, certainly showing no signs of life at this point in time and no threat to inflation. So I think in general, even though we were talking about our commodities breakout, which might have been bad for inflation, bad for bonds, I think we've kind of crossed this hurdle so long as oil stays in the low category. Then this one is one that we need to talk about because it's yet to come. And I'm not sure it's going to transpire or not, but what we found out is on Monday, Japan reported GDP growth annualized of minus 2.3% year over year and minus 6% quarter over quarter. So they're effectively flirting with a recession at this point in time. And at the same time, they saw their GDP deflator, a proxy for inflation, rise by 3.4% year over year versus a 2.8% expectation. So Japan is essentially encountering what amounts to a stagflationary regime at this point in time. You've got you have the BOJ, the Bank of Japan, basically stuck in a bento box, as I refer to it. What's happened on the, in response to the inflation, we've seen the JGB or the JPT 10-year rise, significantly breaking out substantially over this 1.59 level earlier in the year, and just continuing to go higher. That has not, in and of itself, caused a problem for the US in any way, shape, or form. However, on Monday, before I woke up, Ueda said the Bank of Japan will thoroughly discuss the possibility of an interest rate increase at its upcoming meeting. The last time that there was a 25 basis point interest rate increase in Japan was in July of 2024, and that's when we had that massive big spike. We had assets selling globally. The BOJ meets next week on the 18th and the 19th, so that is something to pay attention to, and has yet to sort of resolve. And it may well be something that that we need to be concerned about. As far as SPX is concerned. The question I have is, so goes NVIDIA, so goes SPX. NVIDIA has contributed to S&P 500 returns. 16% of the total return in S&P 500 has come from NVIDIA this year. Today we had IWM, RSP, which is equal weight, and we had mid-caps all break to 52-week highs, all-time highs. And yet SPX has not been able to get out of its way. Why? Because Oracle puked on us yesterday, and NVIDIA went down. So this AI trade is something that's kind of a holdback to the SPX, as that's become a larger portion of the index. So TBD, I'm generally bullish. I'm generally positive. I think we're going to get a Santa Claus rally. We're certainly getting it in gold. We're getting it in equal weight. We're getting it in some of the other assets. So shifting a little bit now to positions and trades. What does that mean? Just a quick update for those who aren't familiar with the way that I work. My trading process. I have 5 strategies I run, but my primary one is what I call a dynamic positioning portfolio. It's long only. It trades ETFs, and it trades a full bonds, equities, commodities, alts, and FX. And then it's primarily a trend strategy. So I'm looking for positive trends. I'm looking to ride trends, but I've also, because trend you get chopped up a bit, and boy, I'll tell you, the last 4 or 5 weeks have been chopped up in a bunch of different places. It's trend with a mean reversion overlay. So it generally I'm buying dips and selling rips. And then when an asset gets deeply oversold and I get a weekly buy signal, I will take that buy signal and start to add to a position, even though it's bearish trend. And then finally, I have tight stops at 2.5%, 2.5 times average true range, and I have a 4-day rule. So that means when my stops hit, I take a position. Oftentimes my stops are hit at the low, what would you guys would consider low end of the range, and so I get chopped up at that, and so I implemented a 4-day rule. So I'll take 25% of my position off once the stop is hit. And then if it rallies from there, then I'll keep the remaining position open. And if the stops hit again, I will take it off until it's totally gone. So just as a reminder, what's my positioning? Current positioning is long FX, short dollar. That's new for me. I've been long dollar and got stopped out of the dollar at the end of November. I am long bonds a little bit, and not. I'm very neutral bonds right now. That's been an area that I've been chopped up a lot on. Very bullish on precious metals and commodities. GLD, GDX, DBB, and SLV are all positions, and equities long primarily SPY, EFA, and EEM. And then in energy and resources space, we've got PDBC, GNR, and VDE, which is a proxy for XLE or the energy stock sector. Let's see here. Okay. So moving on to trades, starting with the dollar weekly chart here. You can see that I started getting long when my weekly signal gave me an very oversold signal. Started getting long here. Have been long for a long time. And then we got this sell signal last week, actually a couple of weeks ago at the end of November, took 25% off. And shortly thereafter, my stops started getting hit. So you can see where I got long. UUP, started to sell some, bought some at the low end, sold some more as it extended, bought some, sold some. And then what happened here is I tried to get cute and buy some at the middle of this range. My stop was at 28.15. I bought this around 28.19 and then stop. So out of that position at this point in time. Meanwhile, I did get long FXF, which is the Swissy, back on the 1st, 2nd of December, and actually just sold some today. So it was a good little trade. I'm still long this. I sold 10% of my position. And then FXA got long around the same time, December 2nd, and again, sold some yesterday, actually today. Sold some today and still sitting on 90% of my position. Then I've been waiting for this one for a while. I got a signal, weekly signal a week ago. Oftentimes my weekly signal will have me buying here, and I waited. And I waited till yesterday and bought it just before the open. And it popped immediately and gave me some affirmation that I bought it in the right place. And so we'll see. Again, I think the real catalyst for this isn't FOMC. I think it is going to be the what happens next week with the BOJ meeting. So we'll see what happens there. SPX, this has been chopping around the last couple of months, not making new highs. It's certainly extended at this point in time and has not made a new high on the weekly chart. VIX is putting in some fresh lows here. This goes back quite a ways. Yeah, so we've got some fresh lows in VIX. Generally hospitable to long SPX. And this is kind of evidence of the chop that I've been in. I got sold out of a couple of my a bit of my position here back in the October timeframe. Tried to get long again the 5th, added some here, sold some here, sold some more here as my stops was hit. This is that kind of one day big sell-off. And got down to a small position and started adding back and added some yesterday because I am speculating on a Santa Claus rally here to new all-time highs. At least that's the way I'm playing it. EFA has been a similar situation, long here in October at the end, right after the FOMC meeting. Stop hit here. Didn't take the rest of the position off, kept a small position left, 50% of my position. It was not a full position here, so it ended up being carrying it, and then I started to add again. I added some to that yesterday, and it did start working again. EEM is a similar situation, just got chopped up here in this little sell-off. It cleared and started adding again last week. I added some again yesterday. We'll see about EEM. Did not perform well today. Moving on to commodities, this is GNR, which is a global natural resources fund. It has been, kind of extended for a long period of time, buy and sell signals here throughout on the weekly. And I bought here and here, sold a little here, took a little bit off, bought some more here in the middle of the range, and then got stopped on the 21st. But it only took a quarter of my position out. And so I did add some to that yesterday. So again, these are assets that are starting to move. DBB has been great for me. We got long back in June. Let's see, where did we get long? We got back in June. This is the weekly chart. But DBB, which is metals, got long beyond my chart. Added some here, sold at the top of the range. This has been a beautiful trading vehicle for me. Just kind of buy when it sells off, and then sell when it's at the top of the range and really extending. Bought again, sold some. I'm always taking 10% off when I'm selling, and then bought some more here, sold some today. So I've got a reduced position, but it's been a good trade. Gold, I'm not going to spend a lot of time on that, just other than to say that I'm long GDX. Bought some, started adding to my, this thing, it chops me up a lot too, but I was able to get long here on the 24th of October and the 27th of October, traded around it, sold some here, bought some here, sold some here, and then bought again yesterday. And then did get a nice 3-4% move today. I almost sold today here, and I just didn't. Should have some, but I didn't. TLT bonds, this last month, thought bonds were going to be working well for us, and just the long bond has not worked at all well. Had the sell signal back in October. This was commensurate with the Fed meeting. Have had some opportunities to get long, so I bought here on the 18th of October. I bought some more on the October 7th. Bought some more here on the 30th. Stopped. Bought some more again. Stop. I'm out. What's worked better for me, and this is my last chart, is emerging markets. This has been a position I've had on pretty much most of the year. I just reviewed trades going back to 1st of October. I added here in mid-October, sold some here, added some back here in the middle of November, added some more on the 20, sold some here on the 24th, added some more. And this has just been, this is how I like to trade. When you get a nice trend like that, you can kind of, buy some, sell some, trade around that core position. So overall, my expectation is that we're going to see a Santa Claus rally, but depends on what happens with the BOJ. My positioning for that is long FXY.
Second vote for Santa rally. Yeah, of course, we'll see. I see a lot of interesting signals in other non-index or equity-related assets. Now, looking at my quote boards, I see that the market likes Broadcom numbers. Okay, so Raphael, the question for you: 69.83. Will we print it in December contract or in H contracts?
I think we're gonna print it. Pretty soon, but I think we may have a tough week next week first. So that's what I'm thinking. But yeah, so far, I mean, despite the changes that we've seen in the macro takes this past month, nothing has changed. I mean, we are above the macro level that defines our bullishness. And since then, we've reclaimed many pivots, being quarterly, being monthly. So, I mean, everything is pointing to the fact that this move on S&P will continue. So for now, I'm still long. I'm still very long gold. You're not surprised by that. I'm long S&P, but I'm taking profit at every chance I get, despite the fact that I think Santa Rally is coming. I think we get a dip next week, so I'm preparing actually for this one. And I'm still long Bitcoin. And this one has been quite tough to play. So I have a nice cushion from the 83K area. I'm unloading at the right places, so that's good. But adding has been quite difficult to do, especially this week. But on the last attempts we had, it was how to say, a difficult task to do. So anyway, I'm gonna go through what I'm seeing, especially something that Ted raised. One point that actually caught my eye also is the dollar. I'm seeing some volatility change in the dollar, and anyway, I'm going to talk about that when we get there. So I'm going to share my screen. Sorry, give me a sec to organize. Okay, so I will start with yes first. So the macro pivot defined provided by Vi and where we took our entry proved to be the right place to get in. And then I mentioned that we are reclaiming since then many pivots. This one was a quarterly one and the new monthly pivot. So ES was struggling around this point, but looks like today and yesterday, in my opinion, we are clearly reclaiming it. So again, another point to push for a more bullish stance on ES. So this is the picture I'm seeing, but I'm having some sell signals. So I have some sell signals on the ES. I'm also having some buy signals on the VIX. There's another ticker I'm always watching. Sorry, I'm always watching for tops. It's a QYLD. My sell signal on QYLD, when it triggers, it usually get 4 or 5 triggers, and then for the next 2 days, you're gonna get some sell-off in SPY, QQQ, etc. So hence why I'm saying that maybe tomorrow we still get a green day, but I would expect Monday through Wednesday next week to show a sell-off on ES. So I'm really eager to see where this sell-off is going to take us. Will we hold again the monthly pivot? Will we have to go to the low of the range or even retest the quarterly pivot? I don't know, but I'm ready to potentially buy this dip next week. So bullish, but yeah, looking to sorry, my cat to add to the position on this one. So the big change I've seen and that really caught my eye was the DXY thing. So you know, you know something I'm watching is always the changes in volatility. Because this is the volatility profile of DXY. It's quite simple. When volatility is down and trade of volatility is down, what you get is a bullish asset. Okay, so this is how we knew, for instance, since the end of September that DXY was transitioning to bullish. And what is happening since the beginning of this month, since the beginning of December, is actually volatility of DXY is starting to move in the upside direction. So it's making actually higher lows, higher highs. It has reclaimed trade of volatility. And what we've seen in DXY in conjunction with this rise in volatility is actually DXY starting to move down and making lower highs, lower lows. So now we are at a point where we are actually retesting many important levels. So first of all, MFR trend. So DXY will close a neutral trend. It's closing neutral trend today. We are retesting the low of the range. I had some buy signal on the 5th of December, which was ignored. And if you monitor the MFR targets, these are the monthly ones. We broke the first monthly target and we are approaching the second monthly target. So basically, let's say this is just a phase, something that will not last. I would expect this second monthly target actually to hold and serve as a resistance for DXY to catch some energy and climb back up. And let's say, okay, DXY will resume his bullish move that we've seen since September, and it was just a phase. If we are about to have a transition, a clear transition for the dollar to actually get back in the situation where it was in most of the 2025 year, I would expect this actually to break and the XY to transition. So I think next week is also key. If you are concerned about maybe a transition in the XY, I think next week we'll get our answers. So either it holds the second monthly down target, it was just a phase, or clearly the XY is about to shift and become bearish. So something very big to watch. Then the VIX. So the VIX, sorry, let's switch to this one. So the VIX, like I said, is currently printing buys. So that's not good, right? So I would expect VIX actually to have a big move at the beginning of next week. So Monday, Tuesday, maybe through Wednesday. And then where it stops is going to give us a clue of, okay, VIX will continue his move down, and we may print some lower teens on the volatility, or we are about to transition. Of course, based on what I told you earlier, my expectation would be a simple move, maybe in this area, in the 16 or 17, and then we will point back down. What supports this idea is actually, if you look at the volatility of VIX, here in blue, volatility is rising. Volatility of VIX is rising. So it's making higher highs, higher lows. Trade of volatility of VIX is going higher. So that supports the idea that we may transition in a real bull market afterwards. Hence why I'm really interested to see what's going to happen at the beginning of next week. I think we could get a nice dip, and that would be the confirmation that we are clearly back in the bull in equities. Now, the regular joke of the presentation is oil. So oil did the same as it's been doing since October. So I'm not going to talk much about it. Went to MFR trend, rejected. Will this thing ever transition to bullish? I have no idea. I know that you are watching maybe to buy in the low mid 50, 55. Maybe I will get some triggers there, some buys or something. But for now, any attempt to reclaim bullish trend has been a failure. So yeah, now this one. So gold, definitely the play of the year. It's been fantastic. Anytime we had the opportunity to buy, to add, it's proven the right play. So I bought big when we were here. I mentioned that during the show. I was looking to buy anytime we retested this area. I added, here was the former monthly pivot. You had this buying opportunity. And what's happening today is the same. This is a new monthly pivot, and we are above, we are confirming. So if you wanted, I didn't do that, but if you wanted to add once more to gold, you had the opportunity to add again today on the clean break of the monthly pivot. I know I prefer silver, so maybe he's going to talk about that. Now let's go to Bitcoin. Okay, so Bitcoin is a deep buy. So I bought when Bitcoin was retesting his macro pivot around the 84 area. So, and I took some off as we approached the yearly pivot around here. If you missed the buy at 83, 84 on the last attempt, You had another opportunity on the 1st of December. I didn't add. I'm happy with the position I had. But if you wanted to add, if you wanted to enter or either to add, you had another opportunity here. Now, I tried to add on the 3rd of December. The reason why I decided to add on this particular day is because Bitcoin closed above his yearly pivot. The yearly pivot is pretty simple. It's basically it's the open of the year. And when an asset becomes positive, it goes above the yearly pivot basically. People are going to try to actually chase for a continuation of the move. The thing that happened the next day was it was rejected. And so far, Bitcoin, but also Bitcoin futures, but also Ethereum, they've been trying to get above this yearly pivot to provide us with a signal that, okay, we are getting back to a positive territory for the year. And so far, anytime those assets are tried to do that, it's been rejection. Okay, so definitely not something, how to say, that could confirm the bullishness of Bitcoin until we are above. So I'm going to try again anytime we have a close above the yearly pivot to add. But I want to see this close to actually be more bullish on this asset. Another problem is the fact that on the volatility side, it's definitely not good. You can see here, trade trend is pointing higher. Volatility is attempting, but we are quite far away from a transition. So for now, it's just a bottoming process. We are trying to buy, we are trying to play. I'm trying to position for the next move. But this next move won't happen until we close above the yearly pivot. Something that changed also, and on the last show with Vi, I said that, okay, I was wrong. I expected the move to happen and it didn't, was the fact that volatility transition in the early November, volatility of the yields. So 30-year, 10-year, and 2-year. So if you remember, transition. Volatility was pointing down, trade of volatility was pointing down. And as you know, this indicates the bullishness of an asset. But when we did the show, what the 2-year, 10 years, and 30-year yields were doing was actually going down. So I thought, okay, that's the first. Usually, when you get this kind of move in volatility, the asset is supposed to go up. And what happened right after we did the show was actually, okay, this actually materialized in the fact that 30 years, the US 30 years, the US 10 years, the US 2 years started to move back up. So, I mean, it proved that the volatility is what's driving those assets, right? And what happened was actually a change in trend also. So 30-year change trend. The 10-year did the same, and the 2-year for now is neutral. It's not back above it's not holding the bullish trend, but it has changed. But look at the volatility. And you can see the inverse situation in TLT. So TLT, look at the volatility is going higher. This is something that you see in a bearish asset. EDV, zeros. So volatility is rising, and you can see trend change also in MFR, bearish, bearish, bearish. So yeah, I mean, if you are still positioned long bonds, maybe need to reassess the situation. And yeah, I want to end with something. I actually also agree with the point made by Ted. Is if you look at the darling stocks, especially NVIDIA, the volatility, and I talked about that in the last show with Vi, it's still not looking good. If you look at NVIDIA, Look at the volatility. It's still pointing higher. Trade of volatility still pointing higher. You actually had a rejection of a trend here on the 8th and the 9th of December. That's not good. Microsoft looks exactly the same. Look at the volatility. Amazon, same. Look at the volatility. Netflix, what a terrible stuff. Look at its volatility. And Meta, which was actually a very good deep buy here, still looking the same. Look at the volatility. So I'm actually thinking, and I'm not surprised by the fact that, for example, ES is outperforming NQ is maybe avoiding tech is the right play for now. So I may be bullish, but I'm not bullish tech. So yeah, that would be my current thinking. So basically, continue to buy gold on any dip you get. This should be one of your largest position. Being long S&P is the right play for now. Look for a dip at the beginning of next week. If it doesn't break stuff at early next week, I think we get a good transition to a good bull market. Bitcoin, so if you bought the dip, very nice, but be cautious until we are above the yearly pivot. It's gonna remain choppy, and then we will really transition into a bull market. Don't worry, I'm gonna address it in the show.
Thanks, Raphael. Great. Agree with almost everything. Great presentation. I believe in our closed stream to trading plan subscribers. I said that the only tech stock I really like from all the signal perspective was Google. But yeah, and Meta was a buy just because of a yearly pivot, but just because of that, because yearly pivot is very important for equities, like a make it or break it moment. Yeah, I will address the correlation and the dispersion, but before I start, everyone who is watching, if you find this video useful, click the like and subscribe to our channel if you haven't. It helps us a lot. Thank you in advance. And we really hope that these videos are useful. Okay, so now I will share my screen. Yeah, so just minutes ago, H contract actually printed 69.83, but current closing price is 69.84. But of course, that's not what we expect. I expect Z contract, at least that would be the goal for Z contract to reach that level. But trading wise and yeah, trading wise, basically we have 1 day, maybe 2 days, because as our viewers know, last week of a contract life is a rollover week. It's a crazy idea to trade rollover weeks, so I will simply take a week off because we will have a lot of erratic movements up and down. We still have 2 million contracts that will need to roll. Based on volume distribution, rollover will not happen tomorrow. Most likely it will happen on Monday. Usually on ES, nowadays it happens on Monday. On NQ it happens Monday, Tuesday, depending on the cycle. But yeah, it will definitely not happen tomorrow, and we still have 2 million contracts that will have to roll. So this is that I wanted to address, and of course, if H contract will be the one for our targets, of course, you have to keep in mind that when Z contract expires, not only, of course, we will have a new plan for the entire year and new zones, but also the gap between SPX and ES will be measured based on H contract. For now, it's measured, of course, based on C contract. So keep in mind that if we will not get a sell-off or some sort of correction next week, it will drag all the equities and SPX in the general higher. So just keep that in mind. But I would love to see 6983 printed in a Z contract. It would be a way stronger signal. But of course, 1 week from now, next weekend, we will have a very important trading plan video with a plan for the next cycle and also macro levels based on what December is doing will define our entire year. So don't miss that, and it will be really important. Now, what I wanted to start with is a risk spread, and the risk spread is just a stock bond spread. So here I have S&P futures and ZB, which is a 30-year bond futures spread. And for now, it looked like we may see some trouble ahead, especially after this overnight dip. I remember I was talking with clients and late at night, and it was happening. I said, "Oh, look, if we make new lows in this spread, especially if we close below somewhere here, then it will be a big trouble for the markets." But for now, risk spreads are signaling that everything is okay, and risk spread closed at the new highs. So yeah, like Raphael said, overall picture is that we still need to be long indices. I will not talk about individual equities in my first part of the analysis, but when it comes to indices, we have all the signals we need. And of course, NQ, which is NQ closed at 25,847 and made a high of 25,861. What was the regular trading hour high? Yeah, so 861. We are 50 points, the highest 50 points below its macro level of 25,907. Of course, NQ was stronger this cycle because before the correction, NQ had already traded at 25,907, but basically for Z contract, what we expect NQ to settle at or above that level, and of course that should drag the ES to 6983 as well. But be prepared for volatility, and we will cover a lot next weekend, 1 week from now, in a trading plan video. Now with all the usual stuff, with all the usual stuff, we will start with the yes, we will start with the average correlation to SPY. I will move to SPY just to make decimals match. But yeah, if we go to average correlation to SPY, this is a 10-day average correlation. It's 0.64. We had some move higher from relatively lower levels, but this market is definitely not too overcrowded. We see quite a big deviations between the sectors, and later we will check the correlations. But definitely this move can continue, and from the sector correlations point of view, I don't see any warning signs here that maybe it's overdone. We had a correction. Market really needed that correction, especially from the levels that it broke. NQ was above its macro zone. ES reached one of its targets, and of course, based on the momentum and how fast everything happened, and also the magnitude of move from the April lows, market just needed to shake things a little bit. But now we are back. We are 30 points away from all-time highs in S&P 500, and this is where the market is going. And above the all-time highs, we will see 69.83. If we change period to 21, which I also like to do, you will see a very similar picture. Correlation is 0.59, which is definitely not high. And we see also big deviations between the sectors in the longer term period. Of course, I would be concerned if we see correlations above 0.85 or 0.9, then I would think that maybe we have some trouble ahead. But of course, for that to happen, tech needs to catch up, and some other sectors also need to catch up, which for now is not happening. Yeah, so this is the correlation, and of course, we can just check the matrix really quick. So it's a 10-day correlation. Dollar correlations are highly negative, and if we are looking at stock bond correlations, SPY TLT is strongly positive at 0.64 in a 10-day period. When it comes to tech and small caps, it's even higher. So this is one thing to note, and this is the thing that I monitor every single day and make my overall decisions about what regime we are in based on that. So if we look at TLT correlations to SPY for a longer period, we are also in the positive regime. Of course, not as high as in the last 10 days, because this volatility that we had caused these correlations to go higher, but the regime is where we have positive stock bond correlations, and usually it means that market is not calm, and of course it's not calm. We are in a bubble. Some enjoy this bubble, others spend time tweeting about how bad the things will become. So everyone finds their own way to relax. But yeah, of course, indices are scared, indices are worried, and capital flows also are searching for the safer way to be deployed. But for now, based on asset performance, there are only two assets where that capital can be deployed, especially from a manager's point of view. And these assets are, of course, indices and metals. Well, I will not talk about copper. Copper is terrible, but when it comes to precious metals, yeah, this is also the place. And silver went up 120% on a year. So of course, it's it's where the action is. Gold followed. Gold, of course, had a tremendous year, and we still have targets that are way higher and way above. But where the capital is flowing is silver. So just keep that in mind. So what it means when we are in a positive stock bond correlation is just basically that capital is not calm, and capital is literally moving and is searching for places to hide, and we have these erratic movements. So yeah, bonds are not the hedge. Well, they are if both of them move up together, but bonds are not the hedge. So when it comes to levels, I wanted to start with silver because, of course, silver is having an insane year. If we take a look at silver futures on a year-to-date basis, we are up 120%. And today, silver settled at 64.59, which is, of course, very significant move today. We got almost 6% move, and also we have some swing levels that I wanted to mention because, of course, in the trading plan videos I showed our subscribers how can they get a target if, for example, second one is broken. But now we also have these very important swing levels. The one was at 63 and 64, and we have a very strong close above. And now I will be looking at 66.83. This is where the market is going, and it will take us all the way to our monthly target of 67.72. If this rally continues, I will update on the targets that are higher, but 67.72 will be the goal of this move for this month. And in the end of the month, you will receive an updated macro zones spreadsheet with new targets for silver, and of course, we will have new year and new game plan. Yeah, but silver is very important to watch. Don't ignore it, and yeah, so gold is lagging this. Let's call it a third leg up this year. We had some corrections. That's why I just call it like that. But today, gold finally saw that its friend silver is going to the moon, so it's following. So we are making a higher highs in the shorter term, and where this market is going now, based on the settlement, we are going to new all-time high. First level to watch is, of course, new all-time high and previous high, that is, and then we will have a monthly target of 44.22, and we will have quite a few targets in 45, 45, 50 area. There is a big cluster of targets and macro zones, and from way past. So yeah, just keep that in mind that when a new all-time high is made, we will see 45 candle. And good news for gold bulls, which is, of course, it has no time frame, but if we close above new highs, the final target for the next cycle will start in the 5 candle. So this is what I wanted to mention. Now we will go back to indices, which is the place where I usually sorry. This is the place where I usually go. And what TradingView is telling me that yes doesn't exist. Oh yeah, okay. So and yes, you have closed finally. You have closed above the monthly pivot. I saw there is a question trading plan.
You are showing Eversource Energy.
Raphael, you said something.
Yeah, you are showing Eversource Energy. Not yes.
Yeah,
I
sorry.
don't know why it's not working.
Okay, no problem. I have something that always works. So for now, I will not be wasting time on that. So we finally got had a close yesterday above our monthly pivot. So finally, we're positive for a month as well. And where this market is going is, of course, the previous high of 69.53 and then all the way to its goal for this cycle of 69.83. For Santa Rally, if we get one, and of course it will happen already in the H contract, we will have new levels, but where I would be, what I would be looking for, I will mention it. Of course, it's a level which is very far away, but I mentioned it before, so I will mention it now that we can go as high as 7,300 if the Santa Rally will really decide to go. I know that it sounds crazy, but just take a look at previous months and quarters, and you will understand that another 5% for or something for yes is not a problem. But that's not what I'm looking for now. Now I'm looking for 69.83. And of course, when 69.83 is reached, we already reached it in H, but I'm still looking for Z contract because that was the goal of a Z contract. So yeah, yesterday I tweeted that 68.78 is last level to clear before we go to 69.83, and now we have two closes above that, and today's close was very strong. And if you ignore the noise that happened in Asian and European session, today's RTH session also was very strong. Uh, they tried to sell it in the first 15 minutes, but basically that's all they could do. So just keep that in mind. This is the goal for the market. For NQ, we have 25,907. 25,907, we already traded there. That's why I said that NQ is stronger. Uh, but we need to clear that level as well, because I expect NQ to settle its December cycle above that. That would be a very strong signal for us. Now I want to show some levels, but let's hope. Oh yeah, this one works. This one works. Yeah, whatever. Russell works. For Russell, we have our flattened zones and at 24.72, and it looked like it, at least for the first 2 months of this cycle, that Russell will be lagging, because when NQ was trading above 24,907 before this correction, when ES was trading in a 69 handle, NQ was actually trading below or at its flattened zone. So Russell was a big laggard, but now not anymore. And quickly I will show levels. Those who have spreadsheets, you will see those levels, but we had a flattened zone, and the target for this cycle, which matches to with 69.83 and 25.907, is 26.53. So this is where the market is going, at least it's trying to go. And of course, Russell cleared its previous highs already. We are at a monthly target, but we have a pretty strong matchup with our quarterly target. So if we see market breaking above this monthly level, this is where it's going. To 26.30 to 26.50 is the goal for the year for Russell. And keep in mind that finally, we are also back above the annual target. So my overall view has not changed. We had two closes below our flattened zone, and of course I tweeted about it because it was really important. And when I saw that, I said, okay, if we break, we will break now. But of course, man, next day, in the next couple of days, it reclaimed it, and then it came back. Now the Bitcoin. Bitcoin is, of course, an asset we receive quite a lot of questions about. So yeah, maybe I'll go to spot. Maybe I'll go to spot, but keep in mind that our yearly pivot for CME futures and futures around the world is 95,000. So for spot, at least the one that I'm looking at, we are still below our annual pivot. We tried to break it two times this week, but all closes were below it. So we will see how it goes. For now, Bitcoin is struggling. We had a very nice opportunity to buy Bitcoin at 85. We talked about it both, I believe, on Market Talk and also in the close stream to subscribers. So I'm sure you are familiar with that level and what it is. But yeah, we had some nice opportunity to buy it, but I see a lot of trouble ahead. So first, we need to clear, of course, annual pivot. So I will be adding, or at least will be considering adding to our positions only then that happens. And what I want to see is a matching signal. So I want to see futures close above its annual pivot, which is 95,000. So at least not for now. and we are below. So of course, being below annual pivot is never a strong bullish signal for our regimes. But yeah, that's why I also mentioned that 85 was a small buy zone. It means not a full size, whatever that size for you is, but a small position. I will be adding above, but I need to close above the annual on both spot and futures. Or if I'm trading futures, then futures is enough, but futures are always more important. And we also got a question. I believe there is a comment in trading plan that can you provide the macro zones for equities? So macro zones are only for futures. There's no such thing as macro zones for equities. Uh, yeah, so maybe bonds. I will just remind you of what is important, and for bonds is important, of course, that we will have new macro levels 1 week from now. You will receive updated spreadsheets with, I believe you will receive two updated spreadsheets next week. In the middle of the week, we will have new levels for currencies, and next weekend we will talk a lot about bonds and indices and how it defines the next year. And I will make a separate video for that, as I did 3 months ago. But for now, when it comes to bonds, the most important price for ZB is 116 and 25, 30 seconds. So of course we are more than 1 point below that. So you shouldn't be considering buying any bonds here because, and especially after the Fed reaction yesterday, I was watching the order flow and they tried to go up a little, but yeah, now we have what we have. And also today ZB tried to touch our one of our downside targets, and it got rejected. So my advice when it comes to bonds, even though my longer term view have not changed, my longer term view still says that we will have a rally in bonds, but well, not this year, and most likely not this year, and not till we get a new levels for the next cycle. I will not talk about oil. I'm watching 55, 53. I can say one thing, that if we go below 53, no bueno, then we will see a big downside in oil. So I expect that to hold and be important. And yeah, so follow the process. Don't make intraday decisions. Watch for the closes. You have all the levels that you need, and for now we are going to 69.83 in ES, 25.907, 26.515 Russell, and of course we have very important levels at 66 handle in silver, and previous highs in gold, and 45 handle in gold also. Yeah, so that's it from me.
Yeah, right. There are some questions, I think, at least, okay, one. Yeah, somebody said, I can't see the level 6898 that you.
Yeah, so MFR is not and will never be a service for day traders. That tweet very clearly said that this is for day traders, so you will not find that level because it's yeah, like I said, for day traders. What else? I also want to say that if you have any questions about the pivot targets, what's the difference? There is a first video in our trading plan section which is dedicated to exactly that. And the macro zones are for futures only. Yeah, so hope it's useful. Also, Brad, happy holiday season to you and your family as well. And Brad is long Google and Apple. Nice, nice, especially on Google. yeah, so I don't see any other questions, at least not on YouTube.
Yeah. Nothing else. I think we're good.
Also, announcement, next Thursday we will have a closed stream for trading plan subscribers, so you can take a trial if you're not on an elite plan, and the topic for the video will be primer on options and how I on useful option strategies, but what also not to do, and a couple of ways how I trade these targets, because I know it was highly requested. So it will happen next Thursday after the close. Soon you will receive an email with a link. Yeah, so thanks everyone. Thanks Ted, thanks Raphael. Remember that next week we have a rollover. We always have. We will see erratic trading. We will see some sparks of volatility. We will see whether it will be to one direction or to both directions, but we still have plenty of capital that needs to flow. So yeah, especially after Monday, be very, very careful in things like SPX and ES in the index futures. Yeah, so see you soon. I don't know if we have a market talk before holiday. So for those, if we don't, for those who celebrate happy holidays, and if we are, if we have, of course, we will see. So yeah, thanks everyone. Bye.
Thanks.
Bye, guys.